The car loan trap that costs buyers thousands. If you're buying a car right now or possibly soon, you're probably going to touch financing at some point, even if you have cash. And here's where most people mess up. They think car loans are the problem. Well, they're not, but misusing them certainly is. Because when a loan is used correctly, a car loan can actually save you money. When used wrong, it quietly costs you thousands of dollars. Let's break this down. Here's the reality. A car loan is not just a payment plan, it's a negotiation tool. Buyers think, what's my rate? What's my payment? Dealers think, how many profit centers can we activate with this one loan? That's why buyers who say, I'm paying cash, often get worse car deals. Not because cash is bad, but because you just gave up leverage before the deal even started. So here's when financing helps you. Number one, gives you price leverage. Dealers make money on financing, so when you leave financing on the table, they're more likely to discount the vehicle, drop add-ons, move faster, and that's not kindness, that's actual math, and it's business. And here's the key. You don't need a full loan. Even a small partial loan keeps them engaged. That alone can be worth hundreds, sometimes thousands of dollars. And all you have to say when you're asked how you're going to pay is, I will be interested in what the finance office has to offer if we can agree on a price I'm willing to pay. Second benefit of financing is cash preservation. Even if you have cash, you might not want to use all of it if your money is working for you somewhere else or you want to stay more cash liquid. A short-term loan makes a lot of sense. The mistake? Stretching the term to feel comfortable. Comfortable payments are expensive payments. Third benefit of financing, credit positioning. We live in a credit-driven world. Don't ever forget that. A properly structured auto loan can maintain credit, improve credit, help insurance rates, but only if you control the structure. You cannot let the finance office do that for you. Here's where buyers get burned by financing. Number one, total cost blindness. Most buyers never ask, what is this car costing me in total? They only look at monthly payment or interest rate. That's how expensive deals hide. Second way financing can hurt you, the term creep. You go from 72 to 84 months. That's not affordability. That's a trap. It increases negative equity, trade-in risk, and dependency on products like expensive dealer gap. Third negative aspect of financing, the add-on explosion. Once financing is involved, the door opens to warranties, gap, tire protection, a number of different protection packages. Some are useful, some are not. Many are way overpriced. Most are buried in the monthly payment. Let's talk about gap insurance and the truth about it. It covers the difference between what you owe and what the car is worth. You typically need it if you have a low down payment, a long loan, negative equity on a trade that you put into the deal, or the car depreciates very quickly. If none of those apply, you probably don't need gap insurance. Now, where should you buy gap if you need it? Do not blindly buy gap in the finance office. It's often marked up. It's very poorly explained. Runs between $1,000 and $1,500. Better options are credit unions, banks, insurance companies. Get the same protection, much lower cost. A smart strategy when it comes to financing, here's where smart car buyers win. They do the partial loan strategy, finance a small portion, get the discount, choose a 62-month term or longer, confirm that there's no prepayment penalty, and pay it off early. That's the leverage without long-term cost. In closing, car loans aren't evil, but ignorance in a dealership is very expensive. The smartest buyers these days use financing when it benefits them, avoid it when it doesn't, and always control the structure, because the moment the dealer controls the loan, the deal is no longer yours. Make sure you follow the homework, guys, so dealers don't rip you off.